Welcome to tonight's special presentation, this week titled Successful Investing in Volatile Markets. My name is Todd Shaffer, Manager of Research for VectorVest, and I will be your presenter this evening. Successful investing buys safe, undervalued stocks rising in price in a rising market. Downtrending and volatile markets may offer fewer opportunities, but there are opportunities. Cash is a position, and there's nothing wrong with waiting out a down cycle, but it could be some time. Or we can choose to participate, but we need to be more selective and proactively manage risk. Let's begin with the objective of successful investing. You can safely and steadily grow your portfolio without taking unnecessary risk and with the confidence of knowing when to buy and sell. The Successful Investor approach to investing is supported in our Quick Start course, our Successful Investor course, and in our weekly coaching group. It's an extension of the VectorVest Simple technique. It's built on a couple key concepts. The first is we only buy stocks when the market is rising after a bullish market signal. We buy high VST stocks with persistently rising price and earnings patterns that are rising with the market. Third, we manage risk, and that means we use a stop loss that limits the risk of our trade to 1 to 2% of our portfolio value. And we step into the market with just a few trades at a time. And one of the keys, particularly in volatile markets, is we want to lock in gains quickly. So many of our clients think success in investing is about being right. You may be happy to know it's not about being right or wrong, it's about putting probability on your side. A systematic or rules-based approach keeps our emotions in check and lets probability work for us. This is true for all disciplines of investing. You need a system that tells you when to buy, what to buy, and when to sell. This is how we do it in Successful Investor. There's a lot of different techniques out there that people use, and I'm not suggesting that this is the only way to be successful in the markets. Successful investing is about focusing on one prudent way to invest. That doesn't take a lot of time, and it doesn't destroy you emotionally, and it's something that you can do confidently. If you're struggling at all to have consistent results, apply some of these principles to what you've been doing. I think it'll help. In successful investing, we identify 3 base criteria you need to consider when picking stocks. The first is earnings. Second, safety. And third, trend. So when it comes to earnings, you want to look for 2 things. That earnings are rising and that they're positive, right? We have a profitable company. Getting less negative is okay, but if you can be picky, pick positive. When it comes to looking for safety, you want to look for 2 things. Safety favors consistent and predictable financial performance with little volatility. Start by looking at a 1-year chart, but also look out at 3 or maybe 5 years. Second, you want to favor stocks that are undervalued. When it comes to trend, you want to look for 3 things. First, you want the price line to look smooth and steady. In other words, you don't want to see a lot of volatility or gapping price action. Second, in addition to being smooth and steady, you want it to be moving higher. And third, you want to look for stocks that continue to hit higher highs. Okay, so let's look at this visually. In this example, I'm showing a 5-year chart, and we'll call this just a generic stock. The top graph is the price in candlesticks. On the subgraph is earnings as reported in VectorVest. We want to see both earnings and price going bottom left to upper right, the smoother the better. Starting with earnings, we favor companies that are profitable and are making more and more money over time. That drives valuation higher, which drives price higher over time. We call earnings the engine that drives stock prices higher, which also helps these price trends to be more persistent. Speaking of price, we want it steadily rising too without a lot of volatility or gaps in the price action. Of course, nothing goes straight up. This stock has pullbacks, consolidations, etc. Even though its trend is generally higher, look for a pattern of higher highs to identify that the stock is still rising currently. We want this pattern to be in place right up to the time we purchase. If you like the stock but it's pulling back or its earnings are falling, put it in a watch list and buy it when it starts rising again. If we think in terms of probabilities, do you think it's more likely that this stock continues to do what it's been doing for the last 5 years? We call this the sleep at night factor. Of course, nothing is promised and market conditions can change. If they do, I'd submit it's a lot easier to identify abnormal price action when the model looks like this. Now that you know what stocks you want to buy, you've got to know how to buy them at the right time. And we identify 3 keys. First, the market must be in an uptrend. You know the old saying, a rising tide lifts all boats? Well, the same is true of the stock market. If you buy a stock when the overall market is in an uptrend, you increase your likelihood, remember, probability, for success. Most people have been taught the philosophy that you can buy any time, but that often turns into buy and cry if you buy in a falling market. First, the market must be in an uptrend. VectorVest offers a range of market timing signals from fast to slow to identify periods when the market is rising and it's okay to buy stocks. In Successful Investor, we use the green light buyer signal. More on that in a moment. But before we go there, let's look at our second principle. The second key is when you get that signal, the stock has to be in an uptrend. We talked about this earlier. You want to make sure that the stock is already doing what you want it to do before you buy it. The third principle, you want to make sure that the stock is clear of resistance. If not, there's a good chance your stock will fall right back down when it hits that resistance level. Now, this thing called support and resistance doesn't come into play on 100% of the trades you do, but if you see it, you got to know what you're seeing. So it's helpful because we want stocks to be doing just what you see in this picture, busting up through that ceiling of resistance so they can continue to move higher. So if you're just approaching resistance, then you want to wait till you've broken through. Because if they don't break through, it tends to hit the ceiling and come back down. You can add support and resistance lines to any stock graph with a simple click of the mouse, so it's very easy to see if you're nearing a resistance level. Now, let's talk some more about the market's trend. It's been tough recently for a lot of people. The market's been up and down, and it seems like every time you get in, the market seems to reverse, sometimes on a daily basis, right? So what we're really saying is the character of the market has changed. Let me demonstrate. Here's a market timing graph from the last 5 years. It has long-term trends. Right? If I put a line on our graph, it has a long-term trend. It has intermediate trends. And it has short-term trends. Notice how the uptrend is relatively smooth and steady. The up legs are extended and the retracements are relatively short-lived. Contrast that with the downtrend, where the down legs extend and the rallies are short-lived. I would also point out how the price action has gotten a lot choppier, right? Look how the smooth price action started getting more and more choppy as we approached the ultimate high, and as we pulled back, each of the bars is higher, so more range on the weekly basis since we're looking at weekly bars, but also the reversals are much more angular. So a lot choppier and faster moving, volatile. Now here's the market timing graph again. I've zoomed into just before COVID, and I've added our green light buyer signals. These are still weekly bars, but the up triangles, the green triangles, indicate green lights in the color guard, in the price column of the color guard. Yellow circles are neutral, and the red triangles, the down triangles, are confirmed down calls. Broadly, I want to point out that uptrending markets collect green triangles. Right, we see all those building. Downtrended markets, you stop getting green triangles. So our topic for tonight, even though the broader market may be trending lower, there are still opportunities to play the long side in that chop, but they're shorter in duration than the smooth bull markets leading up to the market high. It seems reasonable to me that in this environment, you want to put a premium on managing risk and protecting profits. This is how we do that in successful investing. Now that you know the stocks to buy and when to buy them, perhaps the most important thing to know is how to buy them and how to know when to sell them. This is the thing that most investors have the most trouble, particularly in volatile markets. Selling has two objectives: protecting profits and minimizing losses. First, you want to make sure you set your line in the sand, and if the stock hits it, you get out. No questions asked. We use the VectorVest stop price as our initial stop, and it allows for some price volatility, but defines our maximum risk in the trade. Make sure that the maximum risk in the trade is less than 1 to 2% of your portfolio value. We place a stop loss order with the brokerage at trade inception. We don't make any adjustments to that stop loss until the trade starts to progress. So we have a couple rules to help us do that. To protect profits, we want to move our stop loss up as soon as possible while still giving the price room to breathe. Dr. DeLito suggested a minimum threshold of a 10% gain, at which point we would adjust our stop loss to never give back more than half our gains. Use mental stops to take advantage of opportunities like price gaps, parabolic price moves, etc. And particularly in down markets, consider tightening stops on market reversals. One of our techniques is to tighten stops from the VectorVest stop price to a 20-day moving average when we get a market timing signal. Now, I know we don't have a lot of time to teach the whole course here, but I wanted to give you a sense for how this works. So let's put all these ideas together and look at a couple example trades from our portfolio. The first trade I want to show you was entered on May 18th of this year. And look at the market conditions in that time. Market really kind of moving sideways here. We had a green light. And on the follow-through day, because the price moved higher, that was the first requirement. And now we just need to see that our candidate stock was moving higher at the same time. So our candidate stock was ACLS. And here we are still on the 18th. And we see on that day, first of all, just let's look at it as a candidate. Price, bottom left, upper right, smoother the better. Price had consolidated, and we had just taken out that prior swing high, and we entered on the follow-through day. Earnings per share, bottom left, upper right, smoother the better. So the green line is our cost basis here at 141.46. The value of the VectorVest stop price on that day was 124.63, and that became our line in the sand stop. Our give back half threshold, if I take the cost and add 10%, when price goes, or if price goes above 155.60, we'll move our line in the sand stop up to that midpoint. And we'll adjust that stop on a daily basis as long as we're making new highs. And that looks something like this. So here's the original setup, the day we entered. Price made in advance and actually got us into, I call it the bonus round, when we've made a 10% gain. Ultimately, price pulled back a little bit, but then made another advance into this high. And so using this high, our don't give back half threshold is represented by this dashed red line. Now on the pullback, we pulled back enough just on the intraday basis. You can see there's a little tail on that candle. We just tagged that value and it knocked us out of the trade. Well, you can be disappointed that the stock went higher from there and we missed out on some of that gain, or you can be happy and satisfied that you locked in a 15% gain in a choppy market. Now, had the price not tagged us out here, we would have stayed with the trade, making adjustments as we put in each higher high. And when we had some gapping price action here, we might have had an opportunity to make some mental stops below the gapping candle low to lock in a little more gain. Now let me show you one other example. This was from August 29th of this year. Again, we got a green light, still a market chop, right? But we can also see now in hindsight that our uptrend was only going to last a couple more days. Of course, we had no idea of knowing that or how to know that in this time frame, but we had green lights in the color guard, so we looked for a candidate stock that was going bottom left, upper right, smoother the better, driven by earnings per share. Bottom left, upper right, smoother the better. On the day of entry, this is a little more aggressive entry where we had just come up off of this low, established a higher low and a higher high on this candle. So we had follow through on this day. That was the day of our entry. Our next resistance level would be the prior high. So we had some headroom here. See, our cost was $45.70. Our line in the sand at $42.90 was the VectorVest stop price. If you think that's a little tight because of the normal price action here, we could also go below the swing low, the prior swing low of the price action. But because that's more risk exposure, you'd want to make sure that you're not exposing yourself to more than 1 to 2% risk on the trade based on that adjustment. Nevertheless, the price did appreciate here, and let's roll over. And we see there was enough to put together our 10% gain. So on a don't give back half threshold, we established our dotted line. Now, interesting to note, we closed on the 7th of September. On the 6th, we had the down signal in the market timing system. So we don't close the trade, but we did tighten our stops from that VectorVest stop price, which was down here, to a mental stop of our 20-day moving average, which was at that time right at about cost basis. That never came into play on this particular trade because we did stop out with our don't give back half rule, locking in an 8% gain. And of course, unlike our prior example, we're happy we did. No hindsight judgment here at all. And that's one of the keys, right? We can't know what's going to happen in the future. So we have a trading system with defined rules that puts probabilities on our side. Let's just execute on that system. The system defines your success. All our rules are determined before we take the trade. This becomes an intellectual exercise then, not an emotional one. Your system's putting the odds of success in your favor. If yours doesn't, I would humbly suggest you give successful investing a look to help you develop a system that does. Here's a checklist for you to analyze your system. First, does your market signal reliably tell you the market is in an uptrend? Do you even have a market timing signal you use? VectorVest offers several. Are you finding safe stocks rising in price with rising earnings? How long does it take you? If it takes you 4 hours to find a candidate stock, I promise you'll start to cut corners just to make it tolerable. So you want your process to be simple enough that you're willing to do it with fidelity. Do you know how to use stop prices? And finally, are your stops helping you protect profits and minimize losses? These are the 5 things. I want you to grade yourself on these 5 things. If you think you could use some help, I want to let you know that we're about to start a Successful Investor Mastery course where you get not only the course, but also live support, Q&A, and the coaching sessions. If you're interested in getting more information on that, no big sales pitch here. We're offering it at $295, VectorVest.com/TSIC. Just follow that link for more information. But successful investing buys safe, undervalued stocks rising in price in a rising market. Downtrending and volatile markets may offer fewer opportunities, but there are opportunities. We can still participate, but we need to be more selective and proactively manage risk. I hope I've given you some ideas on how to do just that. Thanks for watching.